Hi traders, welcome to Admiral Markets. My name is Chris. Today, a live webinar on an educational topic, which is the application of channels in trading. And we're going to make it more practical, not so theoretical, by looking at live charts. I'll share my vision, then Nenad will with his. And before we do that though, please be aware of these two disclaimers. The first is explaining the fact that the webinar is shown to a global audience, but may not be suitable necessarily for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets are considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So the webinar, before we kick off with today's topic, is hosted by Admiral Markets, and you can see here more info about Admiral Markets on the website, of course. So maybe you logged into the webinar already through Education and Forex and CFD webinars, and if you're looking at the recording, that's how you can join future live webinars. But there's a lot more information here to be discovered. You can check out articles, courses at the bottom here, some more information about all kind of topics in education. But that's just one section of the website. Analytics, here too, articles and analysis and tools are at your disposal. And of course, a lot of info about how you can trade, with what platforms, what financial instruments, and how you can start, of course, as well. So feel free to discover that after the webinar, preferably, because we're going to be taking a look at channels. And well, basically, channels, of course, very useful tools, very kind of natural tools, I would say, almost like they just kind of fit along with the market structure. Just need a little bit of a trained eye to see what lines work best, what lines have the most value, and how to trade them. So it's not rocket science, but it does require a little bit of experience, and that's why Nenad and I are here to help you along the way. Generally speaking, though, I'm a big fan of trend lines, big fan of trend channels, and I think they really provide a lot of good info. It's a simple tool. It is something we have to, draw ourselves, so that does require us to, be active with it. But nonetheless, even though it might take some time to, just a minute or less, right, to draw a trend line, I definitely think it's worth learning this technique. You can do so many things with it: support or resistance, pattern drawings, very important for patterns, right? To just easily spot those, or not easier spot those patterns. For breakout and bounce spots, you can use it in many ways. They have a very important role. So there are basically channels and trend lines. Trend channels themselves have typically, well, trend line has one side, one line, right? All right, so you would have one line like this. A trend channel, I'll start with the basics. Let's see, I use trend lines a bit more than channels, but let's see, it should be here somewhere. When I draw it on my drawing tool, basically. Or you can use this, I guess, like this. Yes, that's it. All right, so basically, the channel would provide a resistance and support line, whereas the trend line will only provide one of those two. It will either be support or resistance, or it could be both, right, depending on the spot of the chart. So both trend line and channels have angles to them. If there's not any angle, then there's just a flat line like this, and that's just actually a vertical line, right? Trend lines, trend channels have slopes typically. If they don't, then they just indicate sideways movement. So when we have a channel like this, a trend channel, all right, is something that basically indicates the trend on that time frame. So it depends on what type of trading you do, right? If you are a intra-week or swing trader, you might use the 4-hour chart for a channel. If you are a daily chart trader, right? You might be using the daily chart for your trend. There's no right or wrong here. It really depends on what time frames you want to trade. Whatever entry chart you use, one time frame higher is typically the time frame you use for trend channels. So if you take entries on the 1 hour chart, drawing trend channels on the 4 hour chart makes sense. If you take entries on the 4 hour chart, doing that on the daily chart would make sense. You can draw channels on the 4 hour chart, the same chart as your entry, but it is not really a trend channel. It's just a channel. So it's a slight play of words maybe, but it's important to know whether you're looking at a trend or not for your own trading. This is a euro dollar uptrend channel, and price has broken out of that last week Monday, and it's been going down ever since. So trend channels basically should have some type of angle, otherwise they're not a trend. Because if the angle is too weak, right? If the channel is going like at this 10-degree angle, this is not really a trend channel. It's a channel, but not a trend channel, because a trend channel has to give a trend. It has to show a trend, and the trend has to have some kind of angle to it. Otherwise, it's not trendy. So, what is that angle? Well, it is basically anywhere between, this is kind of a sentiment, but 25 degrees to 45 degrees angle, right? And it depends, of course, on how far you zoom in or not, whether that angle changes. But something like what I have now, what you're seeing now, or soon you'll see a zoomed in version of this trend channel, and that's a good angle. It's like a 45-degree angle, so that indicates a trend. Now this trend channel, basically what you're looking for is that if it's an uptrend channel, you're looking for a couple of hits at the bottom to confirm the channel, and it wouldn't hurt to have a couple of hits at the top as well. What you're looking for basically is a middle line, which is basically in the middle of that channel. It's also called a heart line, for instance. And what you want to check is that, is price respecting it? I mean, typically it does. You can see here, 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 even here, 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 here. So I mean, it's not a very important thing, but typically the channel and the heart of the channel will be often retested and tested and respected. If it does, it just confirms your channel. If it doesn't, you might want to think about trying a different angle of the channel, maybe moving this a little bit higher or lower and seeing if that would work out better. It's not necessarily a big deal. It's just an extra confirmation. So now you can draw multiple channels on the chart. That's fine. You could have one steeper channel, one normal channel. For instance, this is the trend channel. But on a lower time frame, at the time, on the hourly chart, you could have this channel on the chart. All right? So I'm not sure you see it now. I think you see the blue circle there. So they're both channels. But the bigger channel is the trend channel, whereas the channel with the blue circle is kind of like a momentum on this chart. It would be maybe on an hourly chart or a 4 hour chart. It could be a trend channel. But on this daily chart, it's kind of like capturing a push up within this bigger channel. Still useful information, still a good channel, but not a trend channel. So you can draw multiple channels like this, multiple trend lines, as long as it helps your trading. It doesn't become too confusing, doesn't block your sight of the chart too much. That's all fine. With regard to the trend channel, besides having 3 points at the bottom and some couple of hits at the top, all right, there are other things to think about. And why 3 points, by the way? Because the third one is kind of the confirmation of the trend. Now, how do you count it? That's another story. I mean, do you count this as 2 hits here and this is the third, or do you count this as 1 hit and this as second and third? There are 1,001 ways probably to look at this, depending on who you ask and which trader you talk to. I mean, from my perspective, if we have 2 fractals here, I wouldn't mind counting this as the third already, for instance. And it looks like we do have 2 fractals there. So I would probably consider this already an uptrend channel from here as a third count. The second, if you have two counts, is just a temporary channel. It is a potential channel. All right. The third one is the confirmation if price bounces there. Now, there are some other things I want need to share with regard to channels is the fact that price might, at some cases, break a bit below it and even break a little bit above it. All right. These channels are just zones, not precise, pinpointed levels that never will be broken by a few pips. So it could happen that channels are broken by a little bit, but that price still continues with the channel. So I don't have any specific example ready for that, but uh, not really a good example available, unfortunately, from you know my perspective at this point. But let's see. No, well, now it sometimes happens. Maybe I need to look at different time frames. We'll look at different examples. I'll try to keep an eye on it in future examples. But let's say price would have gone a little bit lower here, but then still turn up. That the small little breaks like this, even to both sides, doesn't mean necessarily that price will continue in that direction. You got to be careful of that. These first breaks, it could just be an overthrow or underthrow, as they call it. All right, it could still be part of the channel. Other important things of the channel to know are the fact that if you're an uptrend channel, this bottom half is the better half for buys, because then of course you are at a spot where price is relatively low, right? The top half is less interesting because then you are closer to being oversold. Specifically, the quarter, right? So you can divide it in half again, and you have quarter lines. And if you really want to be, work on channels, you could even do that like this, and you will have the middle line of the middle lines, which are quarter lines. And then specifically, you would be very interested in the bottom quarter and looking to take profit at the top quarter, or not looking to take longs in that area. So that's how you can, understand the psychology of that channel, and understand where are relevant targets and potential entries, just based on the channel itself. I think maybe I missed something, but those are the most important parts, I guess. If something still pops in mind, I'll discuss that. But yeah, that's the trend channel, basically. Things you want to keep in mind with trend channels. So now that's just one aspect. This is a trend channel, but you can use channels, of course, across the board, different angles, multiple channels, multiple time frames in assessing and analyzing the charts. And we'll talk about that right now. I just wanted to add that these other channels do not have necessarily any requirement with regard to angles, all right? Because you can just connect support or resistance lines to draw those channels, and they don't need to have a certain angle, but they do imply something. If there is a steep angle, it implies momentum, and if there's a flat or shallow angle, it implies correction. So that's something to be aware of. How do you connect these channels, by the way, is you just take the first two bottoms, you connect anything that basically makes sense when looking at tops and bottoms, really, very simply. So let's take a look at a different example. Let me renew the time frame. All right, let's take a look at the hourly chart. So for instance here, this was a channel too, right? Not a trend channel if you trade 4-hour charts, right? But if you're trading a 50-minute chart, this could be a trend channel, right? In any case, you can see that on a 4-hour chart that's good momentum, right? Look at that. You can see this is momentum on a 4-hour chart, in fact. But on an hourly chart, it's a channel. So how do you draw a channel like this? You take the top line the top, excuse me, and you connect it to the next point and see if there's a confirmation. Not necessarily there, but roughly in that zone. All right. Anything on a 4-hour chart where price is 30 pips within a channel, you could consider it a hit, a channel hit. On lower time frames, that's going to be less. So, for instance, if on an hourly chart, I would say 10 pips, right? Something like that, or 15. It's not an exact science, but anything, if price gets within this, close enough margin to this channel, you could consider it a hit. It doesn't have to necessarily go to the exact spot. All right. 4-hour chart, I use about 30 pips. So this is how you do it. You just connect the top or this top, depending what angle is better. I'm flexible in that. This is the second hit, and this is the confirmation. When drawing channels, I don't mind drawing through wicks. All right, and not even sometimes it's okay to cut through certain candles. Wicks are not an issue. You can cut through wicks. It really doesn't matter that much. You can draw the trend channel you think that has the best structure. You can, if you think that the channel that cuts through wicks has a better angle and has more hit points, go for it. Or draw both. If you think that the trend channel that respects the wicks tops is better, go for that one, right? For instance, if this channel would have looked better, and I cut a little bit through this wick, fine by me. But in this case, we know that this one is the better one, right? All right, so in any case, though, at this point, we might not know which channel is used more here, like this, or like this, right? We don't know where the third point will stop, and we know that we can adjust the channel to the third point after we have the third point. Then you connect the channel to the bottom that is available like this, and there you go. You got your trend channel. All right. So it depends on the phase. At this moment, you would have something like this. When going down, you're not sure how it will react as price gets there, but you see that price stops close to it. So you can either leave it or move it slightly down. You have a bottom in play. You first had a bottom here, but price extended the break a little bit. So then you can use the new bottom. All right. And that's how the channel changes slightly as price gives us more info. Right? At the beginning, it's like this. All right. And we could use Ray indeed, yeah, actually. I don't use it indeed, but for this could be handier. There we go. So, when you get a break of that channel, that's actually also giving info to us. All right. So now you should be able to see those. It's the screen shouldn't be stuck. It's probably just a little bit of delay, unfortunately, between when I talk and the charts that you see, but you should be seeing the ray now of the channel. So at the beginning, the channel would look like this. Then we see the break was a gap, but still it's a break. That means that price is actually breaking the channel. The downtrend channel is breaking the support of that. That means price is actually accelerating this channel. Right? And that's also useful info. So we could then move the channel to this bottom if we wanted to. We could leave the old channel, but probably better to use the new bottom. We get a new hit, and we can adjust it slightly again to the new hit, and well, down it goes. And after that, we probably don't have to change it anymore. We could still draw another channel if it's available. If there's a shallower channel eventually, because this is quite steep. Sometimes we get a secondary channel that's less aggressive, less steep, like this one, for instance. So you see that. Hang on, I don't know where to. There it is. Okay. So let me make that a different color. All right. So eventually you see price breaking out above this bearish channel, right? But the break is looking a bit iffy, price is going sideways, and you see that you connect these three spots, right? Maybe I should adjust that a little bit like this. And you got a good bottom here, all right, and you had a hit here. So you might consider the fact that basically the channel angle has changed. And those things can happen, but the downtrend could still be intact. So you put this channel on, and you see if that gives us indeed a continuation or not. So you're looking at the new channel, broke out of the old channel, but the new channel could be something to think about. So within that channel, you have a break here that could be still worth a short, and you're waiting maybe for the break of this bottom after that, for instance, right? But in fact, the price breaks not only the steeper channel, but also the shallower channel with this breakout candle. And in that case, you're probably looking at a reversal breakout above the shallow channel as well. So that would be a confirmation that the downtrend is over. All right, and indeed, price retraces deeper. So this is how you can use 2 points. Once again, is a potential channel. The third is a confirmation, and you can draw multiple ones and readjust them when you get more info. So the role of trend lines within basically trading would be, for instance, to give you potential patterns, potential break or bounce spots. So here, for instance, we have a small channel or trend line. You don't have to draw this top line necessarily. You could just leave it like this, and then you draw a single trend line connecting the bottoms. And this info basically, what does this info give you? Well, basically it shows you that the channel is down, right? If you're an intraday trader, you could consider it a trend channel. And this particular trend line is indicating the support. So when price breaks through that, below it, there could be a breakout with the trend to the downside, as you can see. And we get a good fall from the top of the channel to the bottom of the channel after price breaks through that support. And it could be a smaller channel, right, like this, within this bigger channel. All right. Here again, you got a channel, maybe, well, it's not a confirmed channel on this time frame because it's only 2 hits. But here's a third hit though, and price breaks above that actually. But these breaks to the opposite side, counter trend, are not that interesting because price ultimately is still in this channel and it's moving slowly to the upside. So basically, it's probably a correction, and indeed, it was a correction for more downside. All right, so this was a steeper channel within the bigger channel. But you got to be careful of those breaks because they could just go sideways and then still get the downside. Let's see. For trend lines, you don't necessarily need 3 hits. Trend lines, I think, you want to be a bit more flexible with those. 2 hits is fine using the bottoms or the candles here in this case like this, because basically it's not a channel. A channel you want to have more confirmation. With a trend line, it's just an indication of momentum and direction. So these are all fine trend lines. Nothing wrong with that. You don't need 3 hits necessarily. And the angle is not that important. It does give you information though. Shallow trend lines like this indicate corrections within, in this case, the downtrend. Steep trend lines indicate momentum, right? A trend line like this indicates momentum. So once again, here you could have a trend line like that. A break above that indicates, the end of this momentum, right? So we have momentum within the channel, momentum within the channel, and the break basically here indicating the end of that momentum within this channel. But it doesn't necessarily indicate the end of the channel though. And mind you, that price can sometimes accelerate beyond it, right? We saw it already here. An example where it went a little bit further than that. All right, so with a channel, you want to basically have, as I said, a little bit of angle because this is not a trend channel. This is a channel, maybe on a 15-minute chart, and eventually price breaks out of it, right? And it's this momentum is over, but you can see later on it still continues. So basically, although this momentum is over, if price goes sideways like this, it could still basically be a bull flag for more upside. So if we take this channel off, this trend line broke, so this momentum is over. But if price goes sideways, we can redraw the trend line like this and say, okay, this is a bull flag pattern. We see momentum, we see a bull flag. If it breaks, it could be a continuation higher, which indeed is true. Then we can connect these two bottoms again and wait for the third hit. We have a potential channel, but in this case, this channel really doesn't go anywhere because of the fact that soon later it gets broken. So you could be working with this in mind. This top, these tops here, a small overthrow, that's okay. You got 3 hits, you got a bounce, but the bounce just a few pips, and then actually it breaks to the downside. So that was a short-lived channel. Those things happen too. But still, the info is there. The info of a break to the downside is also valuable. And you can play this, let's say, you can do this continuously on all the different time frames and be looking for breaks and bounces like this. Now, which one you trade depends on what time frames you use, how much time you have to manage, your own trading psychology, what you feel comfortable with. I like to use candlestick patterns and candlesticks in relationship to trend lines to understand what price is doing now, what info am I getting now in relationship to that channel, and then I decide which trades I like. I see some questions, and I see I'm running out of time. It's amazing how time flies. For my feeling, I just started, but unfortunately, we're gonna have to. My part is soon over, so I just want to show you one example of the pound dollar, and I'm gonna answer some of these questions from Leroy, and then I'm gonna pass it over to Nennet. So. First question is, how do you trade small trends within a bigger trend? Like this, for example, a huge downtrend, but in that there's a small uptrend. Well, so what I would be focused on with regard to this trend channel is downside. So I would not be looking for upside trades. I would be looking for the breaks of these bear flags to trade it to the downside. So I want to wait for the correction to finish and the downside to resume. Unless I see reasons for this channel to break. If I see that there are divergence patterns, prices reaching some support level, there are some factors that I think that if price breaks this downtrend channel, it could become interesting to trade. In that case, I would perhaps be looking for both the bearish break of the bear flag in this channel or the break above the downtrend channel for a counter trend breakout. So it does depend on the market structure and the overall picture, what break or bounce I'm interested in trading. In theory, we could be looking for bounces or breaks at any of these points, right? But of course, if we use other factors, it does help the probability of our setups working well, at certain spots. So, it just helps by adding other patterns to understand the chart better. But in theory, yes, all of these points are break or bounce spots. How do I enter the small uptrend and exit on the time and continue the big downtrend? The small uptrend, well, basically you could exit it at the top of the channel or close to the top of the channel. You could use fibs too, by the way, of course, to give some extra confidence. I definitely recommend that. The continuation of the big downtrend, I always use for entry purposes candlestick patterns, candlesticks themselves. So what I would be looking for, like this is a fine breakout candle. This is a fine breakout candle. Those are all these are excellent candles for the continuation of the break, or even here like this. These candles are how I trade the breakouts. Is there a huge difference between supply and demand and zones and support and resistance zones? Support and resistance could be tops and bottoms. Supply and demand zone, you need a move down, a move sideways, and then a move down again, and then price gets back to it and then moves away from it. So it's a very specific kind of sequence of events that need to take place to get a supply demand zone like that. Whereas support and resistance zones could be multiple tops and bottoms, could be trend lines. You could use different tools to get to a POZ zone, a point of confluence, as Nennet calls it, or decision zone, I like to call it too. Do you scalp using trend channels? Yes, you could, definitely, and there's nothing wrong with that. But you just, practice it. You gotta build that experience. That's the only thing you gotta keep in mind. Yes, indeed, Angel. Time is not on my side. I don't know. Somehow things go a lot faster. Indeed. And so you're waiting for retracement, and then you sell again, meaning more entries on your asset. Yes, basically, this is just within the trend channel. That's a great way of trading it. Of course, you can use trend lines in general, not necessarily within the channel, right? So sometimes you don't have a good channel, but you have a trend line like this that is still usable, although this could be a channel actually. Okay, but let me say it this way, right? Your dollar, like this trend line, for instance, right? It's not a channel, it's a sideways move, still a good breakup potential, right? So you can use trend lines. We didn't talk much about single trend lines in this webinar. It was more focused on channels, but you can, let's say, play around with these trend lines and trend channels to measure breakouts. I mean, pound dollar had a great breakout to the downside, and we talked about the fact that if it breaks the 50 fib, that there's space to the 61.8, and that's what happened today. One straight fall down to the 61.8 fib. What was the trigger? Well, in my view, if you look at my wave analysis, um, in my view, there are two trend lines that are key. This one, first of all, that was broken yesterday, and today you could use this one as a break, depending on what time frames you look at. I mean, this one is the first break, this is the second break, and both trades work well. If you're trading a lower time frames, like a 15-minute chart, right, you could have, this could be a breakout, and this could be a breakout, like the hourly chart, but there are earlier breakouts even. This is a breakout on the 50-minute chart, but there's another breakout too, which is this triangle here. So as I often say, trade the pattern after the pattern, right? So you get a pattern break here, and often I say, then look at the lower time frame for a new pattern. Because if it's a close and reverse, right? If it's a move down and a V valley reversal, and you take the short here, you just sold the low. But if you get a pattern on the lower time frame and you get the break of the lower time frame pattern, so you get the original break here on the 1 hour, and here you get the 15-minute break, then the chance of this V valley reversal is very small. So if you're unsure about the breakout and you're doubting whether it's going to be a break or a false break, waiting for this small triangle and then the break of that triangle is another way of trading it. So that's playing around with multiple time frame analysis if you have the time to look at these time frames. If you're trading it on higher time frames, on the daily chart, then probably you would have needed a pending order below these bottoms, or you would have need to wait it for this 4-hour candle to trade it to the 61.8 fib. So those are some, but that was a good breakout on the pound today. And once again, the candlesticks were confirming that. The 1-hour chart confirmed it. The 4-hour chart confirmed it. They all had lows, closes near low with strong candles. I wouldn't say it's a Marubozu candle, as Nana called. Probably the wick a little bit too big, but still a bearish candle that certainly controlled that hour, and I think good enough for a breakout candle. And certainly on the 50-minute chart, you can see that pretty strong breakout candle there, confirming that downside. So that's it for me. Let me pass it on to Nennet. I hope this helped you a little bit with the trend channels, but we'll certainly continue with this topic. It's always fascinating to talk about it. Hi, Nenad.
Hi, Chris. Excellent, excellent as always. Yes, I agree with you. A lot of good price action on the markets lately, and especially concerning channel-wise trading. Yeah, it's one of my favorite price action tools. And now, yeah, I will try to explain different channels that we still haven't talked about, and those channels are, of course, famous center of gravity or regression channel. Then a polynomial progressive channel or PPR channel, and Andrew's pitchfork that I like to use. We haven't covered this subject before, and I think that it's very important to cover it today. So I hope that you enjoy the markets price section on different time frames, and you can see there has been a lot of price movement, and of course market is now waiting for the NFP. And yeah, you can see the euro GBP went exactly as expected. Euro dollar went to 70.82 before it started to drop. It's normal because of the NFP. Yeah, tomorrow the price is, this is profit taking, guys, now. And tomorrow everything might change. You know, if the NFP numbers come out much worse than expected, or something happens with unemployment or average earnings, well, euro dollar will bounce again. So, you know, it's profit taking. The best trade, definitely, what we did this week was the dollar CAD, and I showed you both my FX book real account statement and the trade that I did from my session recap. Huge spike, even more than 70, 80 pips could have been made here on this dollar CAD. And yeah, I mean, a lot of great price action. And pound yen yesterday, good for 40 pips before it dropped from the session recap. So a lot of great trades. And as I say, the primary thing when you trade, guys, intraday, you need to learn to protect your trades. When you see that a price cannot break a certain support where it's trying to get above or below it, you need to protect your profits, because it's intraday trading. You know, it's not like you leave the trade and wait for a full price projection. During the day, there is a lot of news coming in. There is a lot of traders that actively trade, so you need to learn to protect your profits. That is what I do the best, indeed, and that is why I shared the MyFX book account, that as a proof that you can also do it, doubling, tripling the account in a short time. So let's start with the channels. I will continue where Chris actually. I will just make a follow-up on Chris. So the first thing that I want to mention is the famous, well, some people call it COG, or center of gravity. I need to say that there is a lot of misunderstanding what a COG is, or what is basically this regression channel. If you know about trigonometry, if you know some basics about math, basically, simply said, that this COG, or I call it linear regression channel indicator, it draws a straight line of the best fit on a chart. What it means, best fit? It means that the indicator itself applies a polynomial function to the linear regression function in order to adapt itself to the flow of market prices. Because we have a regression trend lines here, they need to self-adjust for volatility. And it's normal. So a lot of traders, especially on some trading forums, have been speculating and calling this indicator a repainter. It's not repainter, because whenever you use a linear regression function on the chart, or a polynomial channel, you need to know that in the past it will adapt itself. But there is a remedy for that, and I will show you how you can check the past performance of these indicators. So every at least what I know, that I might say every, probably, center of gravity indicator or regression channel is based on the cycle subject that Hurst did it. So usually those are Hurst bands, and Hurst theory was that all instruments move in a cycle, and that cycle usually will show up in extreme highs and lows. and prices tend to regress towards the mean, which is represented by this center line here on the chart. So the bands or the trend lines are both above and below this centered line represent the sigmas of the actual data points from the mean center line. And I need to tell you that this might look like a holy grail of trading, but actually this is what this channel does. It adjusts. It's a dynamic channel, so it adjusts to the price of the past. If you go to the indicators list here and you go to regression channel, here you can see the inputs for this regression channel. If you raise a polynomial degree, your channel will automatically apply curves, because polynomial degrees, okay, they apply curves predicting the future price action. So let's put 4, let's say. Polynomial degree of 4 will make a 4 curve in the now moment and in the past. Now, if you adjust the indicator to show and take into account more bars, let's say instead of 30, we will use 300 bars or candlesticks on the chart. Now you will see how it looks. And guys, you know, it looks like a holy grail, right? Because what this channel usually does is selling from the top, buying from the bottom, following the regression mean, following the angle of this indicator. It looks even better if you go to regression and then instead of 1 standard deviation, you enter 2 deviations. And when you make 2 deviations, it means that this channel will be widened, simply said. So this looks even better, right? This looks like a holy grail. But if you go to test how it performed in the past, we will do this now. Just remember how this looks now, and we will go to the shift back of some, let's say 50 candlesticks. Historical shift means that we will see how the price actually looked 50 bars ago. So if we say historical shift 50, you see now 50 bars ago this looked like this, completely different, right? That is why, guys, this channel adapts itself. So what I have learned is that this is a good tool to use if watched in now moment, but only if this channel can show a real data like this in now moment, it can be useful. Otherwise, if you look historically, it doesn't look that good. You see, this is where this breakout was, and the price completely went down the channel. So usually traders will buy here because the price reached lower bands and start with a Marubozu breakout to the upside. But what actually happened is that if you don't have a historical shift, this will look like this, ideally, but it wasn't the situation. So it's not a repainting. This is adapting to the past because of polynomial nature of this channel. Okay, if you know about maths, I'm trying to explain as easy as possible, just to kill some prejudices that traders think that there is a holy grail indicator. Actually, trading is something that I would do even in my next life, and this is what I am. I am this, what you know me. This is what I fully do. And because of that, I always need to tell you the truth about the indicators, about the price movement. And the biggest thing is if we remove all of these polynomial degrees, we will get a good info on the channel. So let's use this info. 300 bars, you see, this looks much better. Now, even if you go with a historical shift of 50, we still have a better price assumption than we had with a polynomial degree of 4. So the less the degree, the less curve it will show on the chart, and it will be more accurate. So you see how it looks. It's still better, right, than polynomial degree of 4. Now you can play with this indicator. We can send it. I mean, I have this indicator, so it's free, of course, guys, as always. 95% of the stuff we are sending you is free. So if you want this indicator, you can have it. Unfortunately, I don't have much time now to thoroughly talk about the polynomial degree and polynomial channels, but this is how you can test it. Put a polynomial degree of 1, put a standard deviation of 2, put like, let's say 300 to 500 bars in the window. On 4-hour chart, it corresponds to 300 4-hour candles in now, moment, and history. And historical shift you use to test how the channel looked in the past. This is very important to do a back test if you wish. Now, based on this polynomial regression channel, we made something similar, and I've been using it lately for my analysis. This is called polynomial progressive channel. You won't find it on the internet, of course, by that name, polynomial progressive channel, because the word progressive is not used a lot by traders. Usually they use COG, center of gravity, or regression. But the main difference between real regression that I showed you and this one is that this channel actually will not adapt to the past. Instead, when price changes the direction, it will make a new channel. So it's a continuous in its nature. You know, something that is continuous is progressive. So I named this polynomial progressive channel. So now you see, in now moment, on 4-hour time frame. And one more tip, it's always best to use these channels on higher time frames. Believe me, guys, much better to use it on 4-hour and daily than it's on, let's say, 30 minutes or 15 minutes. 1 hour is okay also, but most of the time you can watch how it behaves on, let's say, 4-hour time frame. But as I say, 1 hour is good. For me, maybe 4 hours is best. So you can see here how price broke to this pound yen. And if you remember my analysis from yesterday, you could have seen that we made huge, I mean, I hope, profits from the pound yen. And pound yen was one of really best trades. Pound yen was, it behaved exactly as we actually expected. So let's get back to the channel. So this channel looks like this. As soon as the price makes its closes, or as soon as the price moves by a certain degree, this channel will redraw. But at now moment, it stays the same. So 1, 2, 3, 4, 5, 6, 7 bars ago, guys, this looked the same. And here I clearly saw that the channel was broken to the downside. Similar thing, guys, happened yesterday. Let's use this example. I will use my analysis of the euro dollar yesterday, and I said downward 4-hour channel is broken. And I gave you an analysis, and you could have made 30 pips by using this counter trend trade opportunity. The price went from 70.50 straight to the upside, reaching 1780, and it didn't have more momentum to push. But on 1-hour time frame, you see the channel is still there. It didn't redraw. It's progressive. So the price made it to the POC zone, and this was the pips on my webinar. I remember webinar from yesterday, live trading webinar. We made some great trades, pound yen especially, and dollar CAD long trade. But watch here, guys, this is euro dollar. The price went here and it respected this channel almost to the pip. This is where we had the POC zone. WL3, this is Fibonacci number also. This was the order block here. Watch these dots, elite currency, ACC dots that Chris and I made. And you can also receive this indicator for free, guys, if you want. And here you see how the price went up. It reached this middle line here and it went above daily H3, but it didn't have momentum to break from this high. It made a head and shoulders and dropped. But in now moment, I saw this drop here. And even, guys, if you see this drop, you can trade it. So this is progressive. Now, the final thing that I want to show you, of course, is so-called Andrews pitchfork. Also, I've been using this lately, not a niche analysis, but well, let's say we can use it even more if I see a good appliance of that, and I will, of course, use it if I see that price is respecting it as it did, let's say, with my latest also analysis, because this is what we also learn in price action trading school. We learned about channels. You have it all on YouTube, so you can always watch it, and this is also important. So let's use the example. I will put, just give me a few seconds, I will put my analysis template here. I will remove all the indicators except for of course omnipresent Camarilla, and these dots we don't need more. We don't need the ATR. I will just show you how you can draw Andrews pitchfork. So here it is, a naked chart with Camarillas only. So what is basically Andrews pitchfork? Andrews pitchfork is a technical indicator that usually draws by selecting 3 points on a chart. The first point will be a beginning point that represents the start of a trend. The second point it is either reaction high or low depending on the trend, and the third point is also reaction high or low coming after the beginning point. And now the selection of these points is always subjective. So there are some automated indicators that can draw this Andrews pitchfork for you, but most of them are based on zigzag. So I wouldn't recommend. What I would say is try to draw it yourself. You need a little bit practice. And what I usually do is I look at higher time frames. Okay, higher time frames. So this is it. By using our ECC dots indicator, you can distinguish more, let's say, more easier those swing points. And here, let's say, we will use, let's use, for example, historical part, these swing points. So this is low, this is high, this is high, this is low. But we need something bigger retracement. Shallow retracements are not good. So we will use this low, and we will use this high, and then we will connect it to this low, because this is better. So always try to aim for some bigger retracement, because the bigger retracement it is, the bigger the move in a trend direction will be, usually. So if you go to insert, here you will see Andrews pitchfork, and on MT5 it looks even better. I will show you. So if you connect, this is the first point, okay? Beginning point, the start of the move. You connect it to the second point. You just place these, okay, yeah, I didn't click. So if you go to Andrews pitchfork, click once, click the second time, click the third time, and you will see this. And you see how this trend was respected. Then you might add another channel inside the channel. Click here at the low, click at the highest point, click at the lowest point. So you see now, so you're actually adding even more channels. Insert, Andrews pitchfork. Add here, add here, add here. This is the latest swing. And now you see, the price is within the scope of the last swing. It respected this channel perfectly, guys. You see, this is a good confluence. So you need to know how to draw these channels. Let's use some other historical examples. Let's use, again, Andrews pitchfork. This is high, this is low, this is another high. Okay, watch this. So this is very shallow retracement. You see, it's not that ideal. But if we use some deeper retracement, again, this is the point 1. Okay, now we are waiting for a point 2. Okay, this is point 2, most obvious point, and this is point 3. Now this looks much better. You see, this is where it tends to react. If it rejects from the mean, usually it goes up like this. You see how many buyers were there. But if it breaks a higher channel, then it will probably make another move, then try to get inside this channel again. But you know, you need to adapt to trend. So again, you can make pitchfork point 1, point 2, point 3. Now you see this went there, rejected, bullish consolidation, bullish confirmation, almost a double top. This is a hammer here. Bang, it went up, it broke down, it retested, went down. You see, another retest here, another retest here. It's very good. You can also use it on the MT5, and on MT5 it draws these channels, I might say even better. So let's say that you go to insert. Okay, here I'm still trying to cope with the MT5. It's very new to me, but I've been pretty much successful. You have it here in the channels, in the objects channels, and here Andrew's pitchfork. You see, now we will connect also most important swings. Let's use this example here. 0.1, 0.2, 0.3. Yeah, this is different. Now you need to draw it by yourself like this. And now you see the appliance. It uses Fibonacci ratios. On MT5, this is much better because on MT4, by default, you don't have it. Now you can see how the price reacts to certain Fibonacci numbers. It's much better than on the MT4. So you see the price went there, it broke through this, made a swing, then it went to 160.18 and went down. Now this is where price didn't break it because this is also support. This is a confluence of support, confluence of 100 fib. So you see, and you can also get this cool indicator. Of course, here you just need to click HL1 and you will see a swing, a latest swing, okay? And even here you can add pivot points, but what I use is Admiral pivot point. Here it's always, and I will also do a Camarilla indicator here. You can set it to weekly. So this actually adds some more channels inside channels within this pitchfork. And usually when price gets there, it tends to retest and react within these channels. So once more, how you actually how you make these channels. Let's use some other examples. Yeah, this dollar cat is really good, going excellent. So we will go to insert objects, channels, and again Andrew's pitchfork. Let's use, for example, these swings here. 0.1, okay, then we have 0.2, then 0.3 is here. Now we can use much better swings because it adds another channel. We don't need to draw as we did on MT4, and you see how it reacts almost perfectly, guys. You see? So use these tools. You can confirm it with other indicators. You can develop your own trading methods from this, and this is a great tool to use. And you can expect me to also do the analysis on MT5 soon when I get some of my custom indicators. So if you have any questions, don't hesitate to ask me, and try to experiment with this. Great tools for even more pips and more ideas for trading. As you can see, I started to use also Andrew's pitchfork in some of my analysis, and it adds, for my Camarilla MACD, it adds additional confluence. But the thing is, you need to learn how to draw it. You need to get a feel for it, and then I think this will stack even more odds into your favor. For MT4, you don't have like indicator like this. Maybe there you can buy it somewhere, but I don't know. There is only standard Andrew's pitchfork that shows a trident, 3 lines. On MT5, this is standard. MT5 is better platform than MT4. So you see, it's much more better, and visual representation is much better. For MT4, you just need to go to insert, and here you will see Andrew's pitchfork. So guys, thank you for your time. We'll be here with you soon. Enjoy a price movement, and don't forget to subscribe to more webinars and enjoy reading our analysis. We will see you soon, guys. Tomorrow is NFP. Be ready. That is why the price moves up and down. We need to be ready for tomorrow. Cheers, guys. Talk to you soon. Trade safe.